Joining me now for the big fat idea. He's joining me from Kelowna, PI Financial there. Rick Bekkering's with me. Rick, appreciate you taking the time. Maybe you just kick it right off. What's the big fat idea?
Good morning, Michael. Yes, my big fat idea is in the oil and gas services sector.
Okay. And what's interesting you there? What's motivating you at this point?
Well, we've seen a sharp fall in crude in the past 6 to 12 months. We've seen a sharp fall in revenues of the services companies. And we've consequently seen a sharp fall in their stock prices, and the recovery in these names has been somewhat muted.
Okay. And, yeah, you've seen the recovery in some of the oil names, so that's for sure. What kind of thing are you looking for there? When you look at a market that has been in decline like this, and maybe you're searching for a few bargains, do you stick to the senior companies?
Absolutely. The big names are a little bit more diversified. When you get closer to the well, it becomes more and more important. So some of the smaller names offer the bigger pop. So there are some individual names, or if a client's a little bit less risk tolerant, they could play it through an ETF, an exchange-traded fund in Canada or the U.S.
Do you know what the symbol is for the exchange-traded fund for the oil services kind of stocks, so that grouping?
Well, the best way to go is to some of the management companies like perhaps Power Shares or iShares, or give your broker a call and get some of those specific tickers.
And a couple of things about this. What sort of time frame would, I always think it's important, well, two things. I mean, risk is more important than time frame, but let's start with time frame.
Absolutely. I mean, most analysts give everything a 12 to 18-month target, but realistically, opportunity knocks when nobody's looking. So over the next couple of months, if we see a continued decline in the price of crude, we've had a nice recovery, that would be a great entry point for a 12 to 18-month window.
Okay. And what kind of, just part of, obviously it would depend on what part of the portfolio you're putting it in, but I mean, when you look at an ETF, for example, or you look at some of the senior stocks, is that just strictly a growth kind of oriented approach to things, or would you consider it more speculative even at this point?
Well, definitely it's for the higher risk tolerance client, a more speculative client, but we are looking to, take even a sector weight within a balanced portfolio, and by doing that, give yourself some exposure to this subsector that, really, if we see a recovery in revenues, we're talking almost deep value versus, a growth story, a recovery story.
Yeah, and back to what you were saying earlier, very interesting that you've seen the recovery in the oil stocks, but it didn't follow through on the oil servicing, maybe believing that capital budgets weren't going to increase. But, I've seen some sign that capital budgets for some of the major companies actually are increasing.
Absolutely. I think you nailed it. For my clients, that's what we're looking for. We've seen quite a recovery in the E&P, the producers. Yeah. But these other companies that provide specialized services, and they have specialized equipment and people and maintenance. This maintenance must go on. I mean, although it's a fossil fuel, oil is not a dinosaur yet. We're going to need to maintain these wells.
Interesting stuff, Rick. I appreciate you finding time this weekend for us.
Thanks, Michael.
You can find Rick at PI Financial in Kelowna office there, but you can phone him from anywhere. But a very interesting idea. Rick Bekkering, my guest.